Is the Chandler housing market better, worse, or basically the same? Everyone is asking me the same question right now. So today we are comparing 2026 versus 2025 and what's really changed here in Chandler. At first look, the market is very familiar between the 2 years. Prices hasn't moved up or down that much, and headline hasn't changed that much. Okay, but when you look at the underneath surface, the more deep down detailed information, the leverage has shifted. And it's not evenly across the market. Some areas are quietly become more buyer friendly, and other pockets are actually tightened up and increase in seller friendly activities. And here's the part that most people miss. Even though interest rates are lower than last year, buyer behavior hasn't reacted the way that many expected. That gap between expectation and reality is what's shaping today's opportunities and risk for both buyers and sellers. In this update, I will break down where Chandler is softening, where it's holding firm, and what that means if you are planning to move in 2026. So let's get started, okay? So the first information that I want to show with you is actually the supply information, okay? When we compare between 2026 and 2025, inventory in Phoenix Chandler area, we see that the active listing is actually up 9.7%. This means the buyer has more choices on the market right now, more houses to choose from right now, okay? The seller, however, the seller is still pricing is very optimistic, okay? When we say optimistic, that means the seller willing to bet the market by putting on a higher scale, okay? Higher price, okay? So that shows in the average list price, it actually is up 2% when you compare to last year, okay? One of the most important index that we are going to look at is the comfort supply index. It's also up 11%. That means more supply is available on the market right now. That means that creating the supply pressure on the market, okay? So why is it matter, okay? For the buyer specifically, that means you have more leverage than last year. There's more activities, okay? There's more active listing on the market, meaning you have more option. That means you have more leverage. If you don't like a property A, you can always go to property B, C, D because it's available to you, okay? Especially when the home is not pricing sharply, okay? If it is above the average list on the market, okay, in that area, the homes tend to sit longer, okay? And as a result, that means you have more power of negotiation in there. The seller, you do need to be more careful in terms of pricing, okay? Today, even though it's not a crash like a lot of people say, it doesn't mean that you can list at any price that they want or that you want, okay? Because I'm gonna present in a couple of minutes beside interest rate and beside affordable, there still be more that the buyer is concerned as well. And pricing is actually number one in today's market, okay? All right, next, after you look at supply, the next thing we are going to look at is the number of demand, okay? So let's look at the number of demand. Buyer activity hasn't disappeared, by the way, okay? So a lot of people are thinking the buyer didn't buy much this year, 2026, but here's the fact, okay? 3% up. The pending sales are actually up 3%, and home that under contract is actually 9.4% up. These two right here, to be honest with you, pending sale and home under contract, normally is not very much different, okay? Some agent distinguish between the two, but to be honest with you, for me personally, I consider them the same. That means one home's under contract and the future buyer cannot buy it until the current buyer cancel. So in combined, it's actually up 12.4% compared to previous year. It's a significant number, okay? What about closing? Because a lot of people can, under contract and back out and under contract and back out, right? The close sale is actually also up 4.9%, okay? So that means that there's still a lot of buyers go through with the process and close. And in fact, it's way more than, not way more than, but 5%, almost 5% more than 2025. Okay. What is less though? There's one thing that is less. Okay, when we look at the it's actually paying 3% less per square foot on the home that go under contract compared to last year. So pricing is actually better for the buyers in this year. That means the demand is still there. Okay, with all of this information, we can say that the demand is still there. The buyer is still interested to buy in Arizona market. Okay, but this could be a but this could be an and, right? And the buyers has more negotiation power, especially on price. Okay, that means if you are over asking seller, if you are over asking, you will be facing number one, sitting on the market forever, and number two, potentially a lot of emotional attack by the buyers, right? Because they are going to negotiate down the price. Okay, so well-positioned home move, overpriced will sit forever. Right. Talking about price, let's look at the pricing in Phoenix, Chandler, Arizona right now. Okay, compared to 2025 of January, 1% increase. Okay, this is actually the mix of information. Okay, but it's not an alarming mix. Okay, why do I say that? Because average close price is still up 1%. Per square foot compared to previous year. The median sale price is actually down 1.4%. Okay, so obviously you see the two different direction, right? One is the average close price per square foot is go up, but then the median sale price is go down. Okay, this is the indication that this is not the price crash environment. It's a market where pricing accurate matters more than the momentum. Okay, the average, however, I wouldn't rely on the average number a lot. Okay, it's actually I would rely truly on the median sale price, because when we're talking about the average, that take into account of some outliners, maybe some house that sell for very high, or maybe some house that sell very low, right? So it will impacting the average number. The median sale price take care of that. So overall, we see that compared to January of 2025, okay, the home price is actually go down. A lot of information right now indicating that the buyers has a lot of leverage nowadays, right? So we're talking about more supply and also price goes down. Okay, let's look at the market as a whole to see what is going on right now. Okay, so in the next couple of slides, we're talking about the contract ratio is now about 29.8 points. Okay, versus last year is 31, so it's down about 2 points. Okay, it's just a moderate. In fact, it's a very light decrease. Okay, so it's nothing major here. Now, by the way, for those of you who are not familiar with contract ratio, that is basically the number of home under contract over the number of home active at a certain amount of time. So when you talk about 29 versus 31, the ratio is basically the same compared to the two. Okay, what about days of inventory? Days of inventory show the amount of days needed to sell all available inventories at a certain time. For 2026 is 134 days. Now, last year is only 126 days. So on average, it takes longer to sell all the homes available in Phoenix, Chandler, Arizona in 2026. Okay, so for seller, that is another reason you have to be more careful in terms of pricing, because if you take a longer approach, if you price is high, then you may potentially sitting on the market at the longer end. Okay, the comfort market index. Okay, this is the indication of overall market. 88.9% is actually down a little bit to 90.6%. Normally this 88.9, 90 is about the buyer's market mark. Okay, but because it's 88.9, I think broadly it's still a very balanced market. It's just slower and more time to negotiate for the buyers and the seller this year compared to last year. Okay, now I know this is the next topic gonna be very interesting, because a lot of people are actually asking me, what about the interest rate, Long? A lot of people are talking about the lower interest rate compared to the previous year. So let's look at what's happening right now. Okay, 6.19% in today's market in January 2026. I know we're in February already, but let's let's say we don't have the data for February yet. It's only 3 days, right? So January 2026, okay, 6.19% compared to last year is actually 7.06%. That is actually 12% lower, right? If you look at this and do the calculation, it's 12% lower. Yet the market condition, as you see here, the contract ratio is almost the same. The demand is there, but it's not that much higher. Okay, this is telling us actually the interest rate is actually one of the factors, because a lot of people think, okay, lower interest rate, there's going to be more buyers back to the market, but it's not actually the full pictures, right? It's one of the factors. There are some other driver as well, talking about affordability. Okay, that is the home price nowadays. Okay, and then other factor with the family budget and everything, pricing expectation. A lot of people still think that the home price is actually go further down, maybe 5%, 10%. While you may be correct about pricing maybe go further down, I don't foresee that it's go down 5% or 10%, right? Obviously, you see the data of previously saying that the year-to-year median sale price is only 1.5% decrease. Okay, so we're talking about, for example, a $400,000 house. We're talking about 600 off. Yeah, 600 off only for the entire year, and you have to wait, right? So the pricing expectation. However, that is one of the factor. Pricing expectation. They expect home price to go down furthermore. Job stability. A lot of bad news about firing and AI replace the employment, right? That is also another concern. Another thing is consumer confidence, whether they feeling good about the economy or not, whether they feeling okay to spend the money or not. I actually have a lot of people asking me to sell their house because they don't want to own it, or they want to rent and wait for the market, right? They're not confident about the current market, and that's the reason why. And the supply, all the major supply is one of the last important. Okay, the more supply there is, right, that means price is gonna go down. The less supplies, that means it's go up. Okay, so because supply could go up and down according to the timeline, according to time per time, right? So that means it is one of the factor. Okay, so that's what I want to share about 2025 versus 2026. Now, since we are talking about the interest rate, let's look at the expectation for the mortgage interest rate in 2026. Okay, so is the mortgage going to go down finally, right? A lot of people asking me the same question, and now this chart is actually show the prediction of the three biggest financial entities in the US. Okay, Fannie Mae, MBA, and Wells Fargo. Okay, so the blue line is Fannie Mae. Is actually they predicting toward the end of 2026 the interest rate could go as low as 5.9. Wells Fargo 6.2, so it's pretty much flat compared to the beginning of 2026. Okay, and then MBA forecast is going to go up a little bit, and then at the end it's going to be 6.4. So obviously, as you see here, no one know. No one know for sure whether it's go down or it's go up. But the thing that's good about 2026 market, as you see here, regardless of the prediction here, is still much better than 2024. Okay, and it's actually still much better than last year as well. So this could be the year that the buyer will come back to the market. But like I said, it's not just about the interest rate, right? It's about other factors as well. If the economy further go down, if the more people get fired, right, then they will not come back to the market. So this is actually one of the reasons why I showed you this, because no one for sure to know what happened to the market. No one for sure what happened to the economy, right? A lot of prediction and a lot of headline that causing a group of buyers afraid of buying, or maybe a group of sellers like worry about the market and has to sell right away. Don't do that. Here's a fact. No one knows for sure. No one will be able to predict what happened. Even the interest rate, right? Even the interest rate, that is the easiest, I think, to predict out of consumer index, right? Out of the job loss, out of the economy. Those are more complicated to predict. Even the easiest thing, they don't even know. So how can a person to be sure certainly, right? So in that situation, my advice for both the buyers and the seller, look, everything we have to look at the current condition. The current condition is what we know, and we have to look at the number. Okay, that what I always do for the buyers. I have to look at, okay, at the current market interest rate. Okay, what would be your monthly payment? Are you comfortable with that? Assuming that you're already paying rent right now, for example, 2,000. Now the market rate and everything, you only pay 2,100. Are you comfortable with that? If not, maybe this is not the time for you to buy. Until a point that we can get to 2,000, for example, then that would be a good time for you to buy. Similarly to the seller, it doesn't matter what market in 2021, 22 means to you. It doesn't matter whether the market's going to crash or going to go higher in the future, right? Let's look at the current market at this time and what could be the sale price at your home. Look at the bottom line to see whether it is a good number or not. If it is not a good number, then don't sell. Don't worry about selling. Don't worry about the market because no one knows for sure. That's all I want to share with the buyers and the seller. Let's use the number based on facts, right? Instead of relying on headline and afraid of the market. All right. With that, thank you so much today, everyone, to watching the episode, and I'm looking forward to see you next time. Bye bye.